Byron, thanks for joining us. You were on the show last week before President Trump announced these tariffs. Your take, now that we know that they're poised to go into effect on September 1st?
Well, I think the market was ahead of itself before all this happened, and I think we're coming down to an equilibrium point. I do think that ultimately there will be a trade deal with China. It may not take place before year end, but it will take place sometime during 2020. And so when the market hits the bottom here, it'll be like December 24th of 2018. It'll be a terrific buying opportunity. But we've got to resolve some of the issues that are causing some of the turmoil first.
What makes you think that you're going to see a trade deal in 2020? What, I guess, sort of green shoots or evidence is out there that would lead you to believe that? Because
I think, while China takes a very long view of these things, this is really hurting China more than the $530 billion that we buy from them is 5% of their GDP. What they buy from us is a small fraction of our GDP. I think China needs it economically, and Trump needs it politically, and that's why I think ultimately there will be a deal. It's a game of chicken right now, and it's who caves first. And right now, it doesn't look like the Chinese are about to cave.
So, Byron, does that influence how you read this currency situation now? So some people are wondering, is China trying to weaponize their currency here with letting it drop below 7? Or is their economy just doing that much worse than people might have thought that they've been pushed into this position? Which do you think it is?
Well, I think what they're doing is they're using the currency to offset the fact that we're not buying so much from them. By letting the renminbi go above 7, they make their goods attractive to buyers elsewhere in the world. And so they're trying to make up for the shortfall coming from our lack of imports by having a cheap currency that becomes attractive to importers elsewhere in the world. I think that's their intention. So I don't think it's a currency manipulation. I think it's a deliberate currency policy to make their exports more attractive to others.
But are they doing it opportunistically or because they're forced into it?
I don't know. I would say I would say both. They're forced in, but it is an opportunity. They've always had the currency. They've kept the currency relatively stable, and they know that if they push it above 7, their goods are going to become very attractive to others. So that's why they're doing it. They're doing it as an offset to the lack of our buying. Yeah, go ahead.
Yeah, Byron, it's David. In markets like this, there are always risks that sort of come or that are magnified. I'm curious as to whether you see any here, not just obviously Chinese-U.S. relations sort of spiraling out of control, but any moves. We've seen a pretty violent move in the Treasury market, for example. I mean, have, in your opinion, sort of general risks gone up given the market's moves?
Absolutely. I don't think there's any question about that, David. I mean, you have Donald Trump acting very impetuously by slapping these tariffs on $300 billion worth of goods in reaction to Mnuchin and Lighthizer coming back empty-handed from Shanghai. So, when you have the leaders taking a hostile attitude toward one another, almost any kind of fireworks could happen. So I would say the risks in the market are very high, which is why the 10-year Treasury is at 1.6.
Byron, A, what does this do to inflation? B, are we essentially forcing, with policy here, are we essentially forcing the Fed's hand come September to cut rates again?
Well, I don't. I hope not is the answer, I guess, to that question. I don't think the cutting of rates, I mean, that's a sideshow compared to what's happening in trade. They cut rates, the market went down initially and then rallied. Cutting rates was probably the wrong thing to do at the time, but I don't think we should use monetary policy to try to put out this fire. I think we ultimately have to end the turbulence in the market by doing some kind of trade deal with China. I don't think monetary policy will solve the problem.